Hi everyone, let's go over my preferred and alternative macro, high time frame and medium time frame bullish and bearish Elliott Wave scenarios on Bitcoin, starting with my preferred macro bullish scenario where we're looking for a 5-wave move to the upside, where the most common target for wave 5 is between 98k and 174k. And the reason this is my preferred macro scenario has to do with this wave 4 over here and the time it took to develop this wave 4. So in this scenario, this wave 4 is nice and long, and it is longer in time compared to this wave 2, which is what I would prefer to see. Also, this wave 4 bounced right on top of the maximum target for a wave 4, which is the 0.5 Fibonacci, taken from the low of 2 to the high of 3. The low on the weekly time frame was made exactly on the 0.618 Fib time, also taken from the low to the high of 3. And we had a volume peak at the lows, which can signal a potential reversal area for then the beginning of this wave 5 towards the upside. Now, there's two potential trading scenarios over here. The first one was entering at these lows, expecting a wave 4, but that was high risk, of course, with the move towards the downside. In a wave 4, you don't expect the higher time frame candles to close below the 0.5, so that's why the stop loss was then down here. But after this move, stop loss should surely be break even, no financial advice. A more safer option is to add on the pullbacks, basically, for eventually then a bigger swing trade towards the upside. In the bearish scenario, which is currently an alternative, we then have a wave 1, 2, 3, 4, 5. And here, this wave 4 is quite short in time, especially compared to this wave 2. Now, usually a wave 4 is longer in time than a wave 2, but you can clearly see this wave 4 is shorter. And therefore, this scenario as it stands is an alternative. However, in this scenario, wave 5 is in. And you always need a bearish scenario where currently we're looking for a move towards the downside and then an ABC. In this scenario, in then this wave B, as A is already finished, we are looking for a 5-3-5 structure, with this move in a wave A to the upside being a 5-wave move, which is either already finished or we have one more high to go, where maybe the 0.5 can be hit at 32.7k. I do think it is nice if this wave A is going to finish around this white box area, as this is a important support resistance area that we had over the year. So it could be quite nice to end wave A over here, then eventually move towards the downside in a 3-wave structure for a wave B, and then eventually another 5-wave move to the upside and then a wave C to finish wave B. And preferably wave B then finishes between the golden pocket and the 786, because this is a very important resistance area between 40k and 50k for Bitcoin, where if we look at the golden pocket, specifically the 618, it is in perfect confluence with the point of control of this range over here. So the highest volume has been traded at this red line, which is the point of control, in perfect confluence with the 618, and the value area high over here, the blue line, is in very nice confluence with the 786. So this area is massive resistance for Bitcoin, and if that then is the high of wave B in the bearish scenario, we are then looking for a move to the downside, where then of course this invalidation at 15.4k will be removed once we have 3 waves in. And then for this wave C, what I like about this wave C over here is that the golden pocket, which is taken from the low to the all-time high, is in perfect confluence with the value area high over here of a very big multi-year volume profile. So this is incredible support. And if we then look at the most common target area for wave C, which is between the 1 and the 1.236, taken from the high to the low of A to currently the expected high of B around the 786. Of course, it depends where it ends exactly, but you can see that the most common target area for wave C has perfect confluence with anti-golden pocket and the value area high of the range at 9.7k. So this is very impressive resistance for Bitcoin, and this is very important support for Bitcoin. If we then go to the high time frame scenarios and we zoom into the daily time frames, I have one alternative scenario, which is this one, and I have 2 preferred scenarios, and that is quite unique. And the reason that I have 2 preferred scenarios has to do with the medium time frame scenarios that I like to show you, which is also the reason that for the first time I'm actually including medium time frame scenarios in this macro video, because it all depends on what's happening on the lower time frame. So in this alternative high time frame scenario, we are looking at this as a wave 1, 2, then another wave 1, 2, and then we're looking for a bigger 3 towards the upside. So that is a very bullish counter. 1, 2, 1, 2, bam, big 3 to the upside, where you want to see price moving impulsively and volume going with price towards the upside. The reason this is an alternative for me is, first of all, this wave 2 over here being very long in time compared to this wave 2. Now the green count is a higher degree count, meaning we have a wave 1, 2, and then we have the green 3, 4, 5, and inside this green 3 we have the blue count of a 1, 2, 3, 4, 5. So the blue count is a lower degree count. Usually what you then want to see is that the waves inside the lower degree count take less time compared to the higher degree count. However, this wave 2 is longer in time, so it takes longer at the moment to form this wave 2 compared to this very short wave 2 over here, which is something I don't really like to see. And also, if this is a wave 2, then even though it already took ages for this wave 2 to form, it still did not hit any of the more common targets for wave 2, which is between the 0.5 and the 0.786. These are the most common targets for a wave 2 between 24.7k and 21.6k. The 382 is a rare target and not a common target for a wave 2. So that is something to keep in mind. And the invalidation is at 19.5k if price is moving towards the downside. Then the first preferred scenario, which as it stands is not yet invalidated by a hair, but it's not yet invalidated. Price did not hit the 25288 on my Coinbase chart over here, which is basically the highs over here. It didn't hit it, as you can see, just by an inch. And in this particular scenario, we are still looking for a fifth wave towards the upside. So in this scenario, we then have over here wave 1, which is extended. Then we have a wave 2, a 3, a long sideways 4, and then we have a wave 5 to the upside. And because this wave 1 is extended, the targets for a wave 2, 3, 4, and 5 change compared to a normal impulse, or let's say most common impulse, where wave 3 is the extended wave. So because wave 1 is extended, the 0.5 is now a rare target for a wave 2. Then wave 3 does not have a target. Then the most common target for wave 4 is between the 0.236 and the 0.382. However, because of the invalidation, the overlap, you don't want to see overlap between wave 1 and wave 4 in an impulsive structure unless it is a diagonal, but that is invalidated already. So you don't want to see overlap. That's why the invalidation is here, and that's also why the white box is smaller and not reaching to the 382. And then we have wave 5, and the maximum target for wave 5 is the 1-to-1 over here, which is the 1-to-1 taken from the low of 2 to the high of 3 to then, I might actually have to adjust it, the new low over here of wave 4. So that means it's basically 37.6k. So if wave 5 is gonna, or if an impulsive structure is gonna move towards this level, then this scenario over here is invalidated. You don't want to see wave 5 going all the way. It should be below this level over here. Of course, the invalidation is very clear. And the reason that this scenario is still alive is because of this structure. So if I go to the 4 hour, then inside the potential wave 4, right? Inside the scenario I've just shown you, where this is the common target for then a potential wave 4, and you're looking for 5 to the upside, we then have in wave 4 a wave W, X, and then a very short zigzag wave Y. Wave Y is very short. The fib times that you see, the vertical lines on my chart, are comparing wave W. So you take it fib time from the high of W to the low of W to the high of X to compare the time of W with Y. And you can see that wave Y is much shorter than wave W. The 1-to-1 over here, if wave Y would be something like this and end over here, then wave W and Y are the exact same length. But now wave Y is between the 0.236 and the 0.382. So that is much shorter than wave W. However, it is not invalidated, even though it is very short. It is, let's say, a little bit less likely maybe compared to the other preferred scenario I'm going to show you, but it is not invalidated also because price hit the 0.618 over here. And the 0.618 taken from the low or the high of W to the low of W to the high of X is a common target for a wave Y. Now the 1 over here and the 1.236 are also common targets for a wave Y, but so is the 0.618. And the 0.618, as you can see, has been very nicely respected and has been hit, which means that potentially Y can already be in, and this is then a wave 1, followed by a 3 wave in a wave 2, going to the 886. Now the 886 is a rare target for a wave 2, but it is not an impossible target. It's still a target for a wave 2. Before then, you expect a bigger 3 towards the upside. The invalidation of this being a bullish scenario, the beginning of a bigger impulse, is if price is going to take this low over here. So if price would do this, the scenario is invalidated. And if we then look towards the upside, if this is a wave 5, then of course you want to see this high being taken as a bear minimum. So we have to wait and see what price is going to do with this push towards the upside, because in the more bearish scenario, medium time frame bearish scenario, this might still be on the cards. But that is something that I'll show you in a second. Let's first zoom out again to the daily and show you my second preferred scenario over here. So in this particular scenario, we have then a 1, 2, 3 sideways 4 and then a wave 5, which is then finishing a wave 1 and a wave A. Now it has to be said that this wave 4 is very short compared to this wave 2 over here. They're around the same length, like that's okay, but at least this is then the end of a wave 1 or a wave A, followed then by a wave B or a wave 2 in this corrective structure, and then eventually you expect a wave 3 or a wave C to the upside. As you can see, the 382 is purple and so is blue, and the 0.5 is green, and so is wave 2. So the reason I did that is because for a wave B, the common targets start with the 382. So if price moves up and then down, hits the 382 and then moves up, it is much more likely this is an A, B, C structure instead of an impulsive structure and then a wave 1, 2, 3. However, if price is going to move to the downside towards this blue target box over here, which we have between 22.6K and 21.9K, then this over here is a target for a wave 2, one of the common targets of a wave 2, which means that the move to the upside can be either a wave C or a wave 3, and that depends then on the move towards the upside, because if you get a bit of a lazy sideways move towards the upside, it's more likely it's a wave C, especially if the volume is going to be quite equal to wave A. And in a more bullish scenario, if this is a wave 3, you want to see price moving impulsively vertical to the upside and volume increasing with price towards the upside as well. The invalidation in this scenario is if price would now move towards the upside and take the highs at 31K. If we move up and take these highs, then the other high time frame scenario, this one, is going to be the preferred scenario. Now the reason that this is also a preferred scenario is because of what is happening on the lower time frames again. So if I then open the medium time frame scenario that is in confluence with this scenario, where we're still expecting a little bit of a move towards the downside in this scenario, we have to go to this scenario over here. So let's go to the 4 hour. And then move the white B to the right, because this is what happens during daily updates. There we go. In this scenario, we then have a wave W, X, and then we have wave Y. But now wave Y takes more time to form. So again, everything is the same except for wave Y, where this is only the first structure in a wave A for wave Y, followed then by a wave B in wave Y, and then eventually you expect a wave C of wave Y to the downside. So you expect a 3-wave move in an ABC to the downside in this particular scenario, which is still valid if X is taken, because you can still have an expanding flat in a 3, 3, and then a 5-wave move to the downside, where you expect wave Y to take more time, most likely ending somewhere between the 0.618 and the 1-to-1, which is between 15th of June and 26th of June. So this is very, very interesting. And yeah, then the 0.618 has been hit, but price moves up, moves down, and then potentially the 1-to-1 to the 1.236 is a very interesting area and also a common target for a wave Y. And if wave B would move towards the upside, then you will see that the fibs, the most common target for potentially this wave C over here, also moves towards the upside. So that can also mean that we are not going to reach the green 1-to-1 and 1.236, but it can also be a flat where if the high of X is taken, then you can see that the white fibs, of course, pulled from the high of X to the low of A to the potential high of B. Now, if the high of B is going to be above X, then this most common target area for potentially an ABC is in confluence with, of course, the 0.618, but also the double bottom that we have at the moment. So if price is going to move up and not return down, then what do we see over here? We see a double bottom for potentially a liquidity grab. So then move up for B, come down for C, grab the double bottom, which is then in confluence with the most common target area for C, and then an A, B, C, grab the double bottom before then a reversal to the upside, where then wave Y is finished, and then we expect a bigger move towards the upside. So this is what I wanted to say. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use. And for now, thanks for watching and subscribing, and also for joining the new membership program. You can find it with the join button below the screen. It's announced today. Hype. See you at the next one. Bye bye.